If you missed solar stocks in 2020, if you got burnt in 2022, 2026 might be the reset year. You're welcome back to Solar and Beyond with Kene, where we make solar, finance, and business clear and simple for you to understand. Today, we're going to be speaking about top 5 solar stocks to watch out in 2026. Global solar demand is still growing. Grid instability is increasing. AI data centers is increasing electricity demand. Policy support is still very strong. Disclaimer, this is not financial advice. These are stocks to watch out for, not build blindly. Always assess risk tolerance. Let's look at the big picture. Why solar stocks could rebound in 2026. Policy support. The Inflation Reduction Act, manufacturing tax credits, domestic content requirements. 2. Energy demand explosion, AI data centers, EV adoption, electrification of heating. Thirdly, battery and solar pairing. Solar alone is good. However, solar paired with storage is the future. Let's look at the energy companies you can invest in 2026. First Solar. First Solar is a US-based manufacturer. They produce a very good technology of solar panels called thin film technology. They're less exposed to Chinese module price war. They're beneficiaries of the US tax credit. What are the strengths of First Solar? First Solar have strong balance sheet, utility scale dominance, manufacturing explosion in the US. We also need to look at risks also. Module price volatility, policy changes. As someone in solar engineering, utility scale solar isn't slowing down anytime soon. We've seen lots and lots of utility scale solar projects springing up everywhere in the world. This is predicted to keep going higher and higher and higher over the next coming years. Let's look at the next company, Enphase Energy. Why Enphase Energy? Enphase Energy are manufacturers of microinverters, which is the new technology for inverters, residential solar exposure, energy storage growth. They're also manufacturers of energy storage systems, and they're expected to keep growing over the next couple of years. What are their strengths? Strong brand, high margins historically, and they're expanding continuously into Europe and the rest of the world. What are the risks associated with Enphase Energy? High interest rates hurt residential solar, clinical demand. If interest rates drop in 2026, this in turn will see residential solar rebound. This in turn will benefit Enphase Energy. We need to understand something. Residential solar is very sensitive to financing. So it's very key for us to see interest rates drop in 2026 to benefit the residential solar market. The next company we're going to be looking at is SolarEdge Technologies. Why do we need to look out for SolarEdge Technology? They're very strong inverter giants, beating down heavily in the past years, great turnaround potential. What are the strengths? Installed global base, integrated storage systems. The risk associated with SolarEdge Technologies, inventory issues, European slowdown, and competition. I'm actually very interested in SolarEdge Technologies. This is one brand I've designed and installed personally in the past over the last couple of years. And trust me, they have very great inverter technology. They introduce something very unique and different from your traditional inverters, which is the presence of power optimizers. The power optimizers are DC to DC converters, which help in system production and then have very good benefits, especially if you have various rows tilted in various directions. You have shading that's going to be affecting some of your solar panels that have been installed. SolarEdge Technologies is the way to go in that situation. The next company to watch out for is NextEra Energy. Why watch out for NextEra Energy? They're the largest renewable utility company in the US. They own massive solar and wind portfolio, and they have stable dividend. We've seen this happen over the last few years. What are the strengths? Utility stability, large development pipeline, transmission infrastructure exposure. Let's look at some of the few risks associated with NextEra Energy. Interest rate sensitivity, utility regulation. If you want solar exposure with less volatility, utilities might just be smarter. Good for older investors in my audience. The next company to look out for, a global giant, Canadian Solar. Why look out for Canadian Solar? They have strong global presence, strong project development arm, strong battery manufacturing team, and battery manufacturing expansion. What are the strengths? Vertically integrated, emerging market exposure, growing storage business. Risk associated with Canadian solar, Chinese competition, margin compression, and trade restrictions. Let's look at one or two or three bonus mentions we can speak about in this topic. Tesla. Tesla have their own solar panels and their own batteries called the Powerwall batteries. They're very good. The stocks keep rising over the last few years. Here are some of the reasons why you should invest in Tesla's energy business. Tesla have an energy and generation and storage segment, which includes solar panels for residential installation, Powerwall home batteries, Megapack block utility scale battery storage systems. Growth and financials. Tesla more than doubled deployed battery capacity in 2024 compared to 2023, showing strong demand for storage products like Megapack and Powerwall batteries. If Tesla builds up to 100 gigawatts of energy per year of solar manufacturing capacity, with annual revenue potentials in the tens of billions. Profit margin. Some filings and analyst reports suggest that energy storage segment has higher gross margins than automotive sales, which is positive for long-term profitability. Next, Brookfield Renewable partners. They yield focus. The plants have been producing very well over the last couple of years. And also we have Sunrun. Sunrun, they've been great over the years, very good for residential exposure. How to evaluate solar stocks. Before you evaluate solar stocks, think revenue growth, gross margins, debt levels, and cash flow of these companies. What to watch out for? Interest rate trends, module pricing, government policy, battery storage growth. Questions to ask before investing in solar companies. Is this manufacturing? Is this equipment? Is this installation? Is this utility ownership? Different segments have different risk levels. Something that we all should know. Solar isn't dead, it's clinical. The question is not if solar grows. The question is who survives the cycle. Then, which of these companies would you invest in? I'd like to see the comments below mentioning what companies you'll be interested in investing in. Thanks for staying with me to this very moment. Click the like button, click the subscribe button, turn on notifications, and drop your comments. I'll be reading them and answering whatever questions you might have. Cheers and see you on the next one.